Hey, welcome everybody. This is Mark Dannenberg with Options Moneymaker and New Cycle Trading and Analytics. We are here for session 3 of the Aurora Trading System education. So in session 1, we talked about an overview of the Aurora Trading System. And we then focused specifically on the PB3, which is the first of 3 primary entry methods that we use. In session 2, we talked about PB13, which is the second method, second of 3 primary entry methods that we use. Both PB3 and PB13 entry methods are what we refer to as catch trades. And here we are in session 3, and we're going to be talking about PB13, which is a trending trade. So just a reminder and a refresher, just to make sure we're all on the same page here. The Aurora trading system was designed to be trading a time frame, 3 separate time frames. We have a 3-minute chart, we have a 5-minute chart, we have a 10-minute chart. We are using those 3, 5, and 10-minute charts in combinations with each other for alignment and also confirmation that there are no conflicts. So depending on the particular entry method that we're either using a combination of a 3-minute and 5-minute, or we're using a combination of a 3-minute and 10-minute. Now, the Aurora trading system was built with a tremendous amount of flexibility and capacity. There are multiple other signals and signal combinations that can be used, and we've tested and validated and traded every one of them, every combination. The methods that we're using and that we're teaching, that we've narrowed down to the 3 primary entries, the PB3, the PB13, and the PB13, is what we identified as our optimum level of trading performance. So those 3 entries are utilizing 2 primary indicators. The PBA, which is this red and blue block set, blue and red blocks, blue and red blocks, and the CXA, which is on the lower part of my chart, which is also presented as red and blue blocks. You'll see the CXA label on the lower block set, and you'll see the PBA label on the upper block set. So we're utilizing those 2 primary signals, and each of those signals, the PBA and the CXA, represent multiple indicators that we have nestled in behind those single signal presentation formats. So we've made it ultra easy for any trader who has a desire to build a strong income for themselves to be able to trade this system. Instead of having to look at umpteen multiple different indicators and trying to find the alignments, we've done all of that for you, and it's presented to you in this simple single signal format. Now, the single signal format is still using alignment between 2 different time frames. We're never looking across 3 different time frames when we're taking these signals, but we are looking at 3-5 combinations and 3-10 combinations. As I mentioned in sessions 1 and 2, the PB3 session 1 and the PB13 session 2 are what we refer to as catch trades. Those are signals that are designed to catch impulse moves, momentum moves, basically profit opportunities that present themselves either between trends, between an ending trend and a possible new forming trend, or possibly add profits while in an existing trend. And what we're going to be talking about here in session 3 is the PB13, which we use to enter and manage for longer trends and bigger potential profits. PB13 is the most profitable and productive signal we have in the Aurora system. So I think you're going to like what you're going to learn in this session. So we're going to follow the same format we've followed in sessions 1 and 2. We're going to give you a definition of the PB13. We're going to share with you what the entry rules are, what you need to look for in order to find a qualified PB13 entry. We're going to talk about the parameters that we use for stops, protective stops, and also profit targets. And then we're going to provide some management strategy ideas for you and some additional tips for when you're trading. Now, PB13 is a little different than the two catch trade strategies, PB3 and PB35, because there are actually two different types of PB13 entries. Both of them are looking for a confirmation of a 3-minute and 10-minute PBA signal in order to get into a trending pattern. But they have slightly different presentations, and so I'm going to discuss both of those. But like I said, both are using the PBA signal, which is that upper set of blue and red blocks on the chart. Both of them are using a 3-minute and 10-minute, and we're looking for alignment between 3-minute and 10-minute PBA signals. Now, just to be very clear about that, in the PB35 that we talked about in session 2, we are looking for alignment between a 3-minute PBA and a 5-minute CXA. In this case, we're not using a 10-minute or a 3-minute CXA. We are only using a 10-minute and 3-minute PBA. So the first type of PB13 signal that we're looking for is what we refer to as the first presentation of a new trend. And I'm going to show you some examples of that. It's the first presentation of a new trend. It's basically when you either have, let's say, a series of long or blue PBA bars on a 10-minute chart, and the first red bar presents itself. So that's the first presentation of a new trend. The second type that we're going to be talking about is going to identify an opportunity to enter an existing trend. So it may be a situation where we took a profit or possibly took a loss on a trade, and there is a representation of a signal that's aligning the 3-minute and the 10-minute that will let us provide an opportunity for us to get into a trend that is continuing to move in the same direction that we had previously traded. They have slightly different dynamics to them, so we're going to talk about both. Regardless of the type of trade that you're entering, the default stop and the default profit target are the same. So when we're trading trending entries, PB13s, we have a default stop of 30 points. So remember, on the two catch trade strategies, PB3 and PB35s, our default stop was 20 points. In the case of a trending trade, we use a default stop of 30 points. So if you're trading a single contract on the NASDAQ 100 futures with $20 a point value, you're putting $600 at risk on a trending trade. We give the trending trades a little bit more of a stop, a wider stop, because our objective is to let it move around, let it gyrate around a little bit, and we want to be in the trend as it really starts to gain some momentum. Now, just like we taught with the PB35 and the PB3, if looking at the 5-minute fractal, we still use 5-minute fractals, if that allows us to have a stop that is less than 30 points, that is where we're going to put our stop. So the default is 30 points, but if we can lower our risk from below 30 points by using a 5-minute fractal, then we're going to adjust our stop to the 5-minute fractal. We have a default profit target on PB13 trades of 50 points off the open of the bar. Now we're going to talk about how you can perhaps adjust that, maybe even make more, maybe some considerations of locking in before 50 points, but our default stop is 50 points. And when I've shared with you in the past the performance on the thousands of trades that we've tracked, our performance is recorded based on it either hit 50 points or it hit 30 points or a 5-minute fractal, or it took us out at one of the rules that I'm going to share with you. So the first entry type, which is the first presentation of a new trend, is you're going to enter a PB13 trade when the 3-minute and the 10-minute PBA signals are aligned. However, so you want that alignment. However, when the 10-minute PBA comes on at the open of a 10-minute bar, and it is the first time that directional bias has been presented, so it might be the first blue bar after previously printing blank bars and or red bars. It's the first time a 10-minute new directional bias is being presented at the open of a 10-minute bar. We're going to wait, and we're going to wait for the 3-minute to confirm. Now the 3-minute may already be aligned. So this can be a little confusing, because if the 10-minute comes on at the open of the bar, we always say we want to take our trades at the open of the bar. But if it's aligned at the open of that 10-minute bar with the 3-minute already, we're still going to wait one more 3-minute bar to confirm that the signals are still aligned. This is only the case when it is the first presentation of a new 10-minute bar with that particular directional bias. And we'll enter the trade on the next 3-minute bar if the next 3-minute bar opens and continues to confirm that the 3-minute and 10-minute signals on the PBA are aligned. When the 10-minute PBA comes on mid-bar, so mid-bar is any time after the open of the 10-minute bar, we're going to enter with the next 3-minute or 10-minute bar, whichever is first. So let's just say hypothetically that a mid-bar 10-minute came on at 9:53 and 30 seconds. The next 3-minute bar is going to be the 9:54 bar. That would prompt us to take the trade if the 9:54 bar is confirming alignment on the 3-minute. Let's just say hypothetically that the 10-minute mid-bar comes on at 9:59, okay? So you've got 1 minute before the next print of a 10-minute bar. So in that case, the 10-minute bar would be your prompt. So it's really anytime you have a 10-minute bar coming on mid-bar, you're going to take the trade on either the next 3-minute or the next 10-minute bar, whichever comes first. Whichever presents itself first, as long as it's confirming the alignment, you're going to take that trade. So here's an example of the 10-minute PBA short came on at 10:10. So here's the 10:10 bar on January 7th. Came on at 10:10. It's the first presentation of a new trend. And you can see that clearly, that this is the first time that the PBA on the 10-minute is presenting a short condition. Now, it had presented short back here, but what I'm saying is it is the first time after we've seen a long print and actually a neutral or blank print. So this is considered to be the first presentation of a new directional bias on the 10-minute chart. And that came out at 10:10. The next 3-minute bar that will open will be the 10:12. And we already had confirmation as of 10:10. We already had confirmation because everything was aligned. In fact, we were seeing short conditions for several bars leading up to 10:10 on the 3-minute. But since that's the first presentation of a new trend, we are going to wait for one additional 3-minute bar to open and confirm the alignment. So the entry in this case is on the 3-minute 10:12 bar. And as soon as we are in the trade on the 10:12 bar, we are using a 30-point default stop, and we have a 50-point profit target. So I'm going to show the DOM here in a little bit, and we're going to talk about how to manage your DOM. But in this case, you would actually need to scroll down your DOM and adjust your adjust your stop to 30 points instead of 20 points, because we have our DOMs set up to default to 20. And that's because we typically have more trades that are catch trades than we have trending trades. And so it's just easier to adjust on the fewer trades that are trending trades. So your default stop is going to be 30 points. We'll adjust to that. Your default on your DOM is defaulting to 50 points. If you had slippage on the entry, you might have to adjust that a few ticks, but there's generally no rush on that. You've generally got some time to make the adjustment of the 50-point profit target. But this, once again, to conclude, is first presentation of a 10-minute PBA, and then we wait one more 3-minute bar to confirm that entry. All right, the second type of entry we have on a PB13 is when we're entering an existing trend. We can enter when the 3-minute PBA and the 10-minute PBA signals are aligned, so that's still a requirement. When the 10-minute PBA comes on at the open of the 10-minute bar and is not the first presentation of a new trend, we can enter on that 10-minute bar as long as the 3-minute is aligned. All right, so let me say that again. I just showed you an example of when the 10-minute was presenting itself as the first presentation of a new directional bias. Now we're saying, well, what if it's not the first presentation of a new trend and the 10-minute bar comes on at the open of that new 10-minute print? As long as the 3-minute is aligned, you can take the trade at the open of that 10-minute bar. When the 10-minute PBA comes on mid-bar, you still are going to follow the same rule for entry as in entry type 1, where you're going to wait for the next bar to confirm, and that's either going to be the 3-minute or the 10-minute, whichever comes first. So it just depends on how far into the 10-minute bar print you are, and you're going to take the next 3-minute if that happens to be the next bar that's going to present itself, or the next 10-minute bar if that happens to be the next bar that's going to present itself. So whichever is first. So that rule is exactly the same for entry type 1, which is the first presentation of a new 10-minute bar, or entry type 2, which is entering an existing trend. So here is an example where the 10-minute PBA came on short at 11:20. So this was on December 28th. So at 11:20, it's not the first presentation of that short directional bias, because we had short PBAs prior. We did have a blank space, but we had no long PBAs presenting themselves. So this is considered to be a valid entry into an existing trend. So we're basically just rejoining the existing trend. So we would enter on that 11:20 bar because it came on at the open of the bar, and we already have alignment as of 11:15 with the 3 minute. So 11:15 printed a short PBA. 11:18 was in the process of printing a short PBA. And so 2 minutes later, after that 11:18 bar, the 11:20 comes on and presents a fully aligned condition. And so we are going to rejoin the existing trend. So again, this is a rejoining of an existing trend because there was no contradiction in the PBA prior to that printing. And we had already previously seen the PBA printing short before. So full alignment, we're into that trade at 11:20. Same parameters apply. We're using a 30-minute, 30 point stop, and we're using a 50-point profit target. 30-point stop and a 50-point profit target. So let's talk about the exit, because the exit strategy and the management of exits is a little different for PB13s than it is for PB3s and PB35s, which are the catch trades. In PB35s and PB3s, we're looking for 10 points of profit. In PB13s, we're using a default profit target of 50 points, but there can be a lot that happens between your entry and potentially 50 points. And we want to make sure that we are managing it appropriately. So, like I said, we're going to start with a default of 30 points or a 5-minute fractal, and we're going to start with a default of 50 points of profit target. The way you're going to exit out of this trade is it hits your 30-point stop or wherever your stop is, if it is a 5-minute fractal less than 30 points, or it hits your 50-point profit target. Now, there's a little bit more management that we are going to apply to this, which I'm going to share with you here on the next slide. You also could be closing this trade if the 10-minute PBA prints a stopped signal. If the 10-minute bar opens and in your alerts log you see the message signal stopped, then you will close the trade. That's basically saying the conditions that you used to enter this trade no longer exist based on Aurora's interpretation of the market movement and market activity. And so if it says signal stopped, you're going to close the trade. Now, if that signal stopped message comes on mid-bar, which it can, then you're going to look for the next 3-minute bar. And if it no longer aligns with the 10-minute, meaning the 3-minute is blank, and now the 10-minute is blank, then you would go ahead and close the trade on the next 3-minute bar. So this is a relationship of the 10-minute and the 3-minute PBAs. We don't always immediately take action on the 10-minute. We sometimes wait for the 3-minute to say, yes, go ahead and take action. And then there are other conditions where we'll take immediate action based on the 10-minute presenting itself as a signal stopped condition. The other way we will exit out of this trade is if the PB35 presents a opposite entry. So if we're long on a trend trade, PB13, and PB35, which is the combination of the 3-minute PBA and the 5-minute CXA, if it presents an opposite signal, so if you're long on a PB13 and PB35 presents a short, you're going to reverse the trade. You're going to take yourself out of that long trend. If you have only a PB3 reversal, it's a valid PB3 short. If you're long on a PB13, you're not going to reverse the trade. We're going to hold the trend. So you don't close it if you have only a PB3. Close it if you have an opposite PB35, or you would close it if you have an opposite PB13. Close it and reverse the trade. Now, this is where it gets a little bit more involved in managing a PB13 trade. Remember, you're starting out with an initial profit target of 50 points, and we'd love every one of them to hit 50 points. And it's amazing how many of them actually hit 50 points, which is why the PB13 strategy is such a big profit production. So here's what we do. Once the profit off of the bar open has reached 20 points, that's our line in the sand. Once it's reached 20 points, we are going to adjust our stop, which is defaulting initially to 30 points. We're going to adjust our stop to the high or low of the previous 5-minute bar. So the 5-minute chart is being used when we're trading and managing a PB13. The 5-minute chart is being used to set perhaps a favorable stop by using a 5-minute fractal. And now the 5-minute chart is being used to adjust our stop as we start to make progress in moving along that trend. So once the trending trade hits 20 points of profit, 20 points of profit, we're going to adjust our stop from 30 points to whatever the high or low of the previous 5-minute bar is. Now, if by some fluke that happens to still be more than 30 points, then we're going to leave it at 30. But when we can make that adjustment to the high or low of the prior 5-minute bar, and it is less than 30 points, that's what we're going to do. The reason we do that is because it allows us to follow the trend. When you are in a true trending pattern, you typically have a pattern of higher highs and higher lows. That's a long trending pattern, upward bias, or lower lows and lower highs on each subsequent 5-minute bar. That's a declining pattern. So what we're going to do is we're going to use that knowledge that we have about higher highs and higher lows and lower highs, and we're going to set our new stop at the high or low of the prior 5-minute bar, which ultimately reduces our risk on the trade as the trend progresses. And it then eventually ends up locking in a portion of the profit that's already been achieved. And it allows us to stay with the trend until hopefully it hits our 50-point profit target. When we're using an entry type 2, which is that re-entry where it's not the first presentation of a PBA on the 10-minute, that is re-entering. It's like a continuation of the existing trend. So if there's been no break in the 10-minute PBA, and we're rejoining the trend, then we are going to immediately begin using the 5-minute rule of the high or low of the previous 5-minute bar. So that's basically saying we might have taken our 50 points of profit, or we might have gotten stopped out for a loss on the trade. And now there's an opportunity where the 3-minute and the 10-minute are aligned, and we're going to rejoin the trend. And because we're rejoining the trend and we can still recognize the pattern of higher highs and higher lows, or lower lows and lower highs, we are going to immediately default to using the 5-minute high or low previous bar rule. And we don't need, on a re-entry, we don't need it to move 20 points first. Now, one thing to think about, and we actually had a great example of this today. We all would love to just hold and follow the system validation that has shown that we have a frequent number of 50-point moves. But when you have what we refer to as an impulse move, an abrupt move on literally on the bar that we entered, it's smart to just lock in something. You know, it's going to be at trader discretion, but it's smart to lock in something. So there was a trade today that on the 3-minute bar, it moved almost instantly 45 points. It didn't get to 50, but as instantly as that impulse move happened, it could move right back up and have no profit at all. We see this happen around regular market session open. We see this happen around news, and we see an impulse move that gives you this very rapid and very abrupt move. At that point, I would rather just lock in something so that it doesn't exhibit an impulse move in the opposite direction and actually take me out for a loss. So this is something where it's just important that you watch your charts when you're in the trade, and it's important that you get comfortable with these types of moves. So the example that we had today, I think it moved to 44 or 45 points. I immediately locked in 40 points. I was taken out for 40 points of profit, delighted with that, and then it ended up going to 50. So I left 10 points on the table, but sometimes those impulse moves, especially early in the day around regular market session open, you can see it move 40, 45 points and then reverse back to a 100-point move, and all of a sudden you're taken out for a 30-point loss. It can happen that quickly. So when you see those impulse moves, don't be bashful about just locking in something. Something is better than nothing. And yes, you might leave a few points on the table. As I've said before, the data history of the Aurora system shows what the opportunity is that the Aurora system presents if all you do is follow a strict set of rules with the Aurora trading system. But if you end up performing at 85 or 90% of what the Aurora system averages, you're going to be very, very happy with your income. That's my belief. So example of an impulse move is it moves 30 or 40 points on a single bar. Just consider locking in some discretionary profit. Even if it was to lock in a break even, so you can't lose on the trade, but you don't want it to move 40 points in your favor and then come back and take you out for a 30-point loss. If the 3-minute and 5-minute PBA timeframes are no longer aligned with the 10-minute trend, you should consider reducing your risk. That's just a trader discretion tip. You could consider reducing your risk because if the 3-minute and the 5-minute are now no longer aligned, or they're starting to show hints of reversing, there's nothing wrong with reducing your risk. Now, I want to make it very clear also that when I suggest that you lock in profits on an impulse move, or I suggest as a tip that when you see the 3-minute and 5-minute perhaps weakening, no longer aligned with the 10-minute, maybe you reduce your risk. Those are not factors that are comprehended in our tracking. So the move today that I was citing as an example, we ended up in the tracker recording 50 points because that's what it got to, even though I took 40. If that impulse move had abruptly reversed and all of a sudden taken us out for 30 points of loss, even though it got to over 40 points of profit, we would have recorded it as a 30-point loss. When we see weakening on the 3-minute and 5-minute timeframes, we don't adjust our tracking. So there are some choices you can make as an independent trader that might actually improve your overall results compared to the system, or it might give you a less favorable result compared to the system. If you want to achieve the level of performance that we've been sharing with you in the system, then you really have to just robotically trade the system and not let your emotional impulse take over. But I'm just going to be very honest and very practical. I think it's not very easy for a trader to sit there and say, well, I got 44 points of profit. I'm 6 points away from 50, but I'm not going to take any action. And then it takes you out for 30 points. That's going to be something that's going to give you a lot of heartburn, anxiety, and you'll feel like you're licking your wounds. But that is exactly the way we track. And that's why I've said to you before that I think that the tracking that we do is actually conservative, because it doesn't take into account these situations where we might have locked in 40 points and then comes back and takes you out for a loss. And it doesn't take into account these situations. What we're doing is we're giving you some tips to consider so that you could consider what action you want to take as an independent trader. If you're, trading mid-morning and you know that your goal, maybe your personal goal is to do 50 points a day, and you're up 30 points and you get into one of these impulse moves, well, my personal goal is going to influence me to say, I'm not sure I care about the system. My personal goal is going to say, I'm going to lock in the 30 or 40 points because I've hit my goal for the day. That helps me hit my goal. So there's all those factors to consider, and you have to decide as an independent trader what action you want to take. So let's take a look at some live charts here. I've got a couple of examples that I want to share with you here. We're going to go to 10:03. And let's see here. Let's do this way. Okay, we're going to get our 10-minute chart back to 10 also. So you can see here the PBA that came on at 10 o'clock. Now I'm going to scroll in my alert log and I'm going to ask myself the question, well, did that actually come on at 10 o'clock? And let me just see here, make sure I'm on the right day. Sometimes I go back too far on the 10-minute chart. So at 10 o'clock, okay, I have to make one adjustment here because I'm going back in time a little bit here. At 10 o'clock, we had our first presentation of a PB13. Our first presentation of the PB13, and 10:33 is our signal to confirm. So at 10 o'clock, we have our first presentation of a PB13. And on the next bar at 10:03, we have our entry to enter the trade. Okay, see that? 10 o'clock, the bar comes on. 10:03, we have our entry to get into the trade. You can see that was a really nice move. That was a really nice move. Our default is 30 points and our profit target is 50 points. So then we have a 12:10. We have a 12:10 bar that presents itself. And on the 10-minute, the 12:10 actually came out at 12:13 and 24 seconds. So the 12:10 was not valid. It comes on at 12:13 and 24 seconds. I'm looking for the next 3-minute bar after that, which should be the 12:15 bar. So the 12:15 bar was our entry. And in this case, this is a re-entry because it's not the first presentation of the 10-minute PBA. So the 10-minute PBA comes on at 12:13 and a few seconds, 12:13 and 24 seconds. We're not taking that, that's a mid-bar print. So the 12:15 bar is the entry. Now, since this is a re-entry into the trade, into the trending trade, we don't need the price to move 20 points. We're going to use the high of the prior 5-minute bar, high of the prior 5-minute bar, which in this case would be actually just about 30 points back. So in this case, it doesn't really matter that much. We're still going to be about 30 points back, but we're going to default to the high of the prior 5-minute bar simply because we are rejoining the trend. And this 12:15 bar actually moved 80 points. That was a really nice move. That's the one I was talking about from earlier today, that it moves so rapidly. It moved down 80 points. It moved so rapidly. It came up short of 50 points. I locked in 40 points, and then it ended up moving the rest of the way and then some. So that's just a really great example, though. Although it wasn't an advantage in terms of risk to use the prior 5-minute bar, it still shows the structure of the trade where there is not, this is not the first presentation of a 10-minute. The 10-minute came on mid-bar. We wait one more 3-minute bar to confirm. We take the trade, and our default stop is going to be the 12:10 5-minute bar. We don't need to wait for it to move 20 points. In this case, it did almost immediately, but we don't need to wait for that. We're going to use the default stop. Generally, when we are re-entering a trend, unless you have an abrupt series of impulse bars, generally that prior 5-minute bar on a re-entry is going to be an advantage over using the 30-point default stop. Okay, so I'm going to take that back off there and push my charts out. So that should give you some really great examples of the PB13. Now we're going to talk about doubles. There have been a lot of questions in a lot of trading room about doubles. And what we define as a double is when you have both a valid PB13, which is a trending trade, and a valid catch trade that have presented themselves at the same time. Sometimes they will come on at exactly the same time. So you're opening them both at the same time. And other times you will be in one or the other. You'll possibly be in a catch trade, and then a PB13 will come on, or you might be in a trending trade and a PBA or PB35 come on. So what you're simply doing is you're adding another contract to your DOM if you want to trade the doubles. All of our tracking assumes that we're trading each strategy that's presented to us. So we're trading doubles. So what I'm going to do is I'm going to pull over my sim DOM here. And let me pull up a chart here. There we go. All right, so let's just say that we want to go long. Okay. And we just went long, and now we're long at 15,501 and a quarter. The default stop is 20 points back. You'll see that at 481 and a quarter. And the default profit is 50 points higher, 50 points higher. So it's going to be a 51 and a quarter. I'm just going to scroll up there once and show that to you. So that's placed there automatically because we're using a simple bracket order with a 50-point profit target, which is 200 ticks, and a 20-point stop, which is 80 ticks. And we have auto checked, so it automatically puts the stop and profit target parameters out on our DOM when we enter the trade. So now we see that there is another opportunity. So let's just say that's the trending trade. And I'm going to pull this over here also. So now we want to enter another contract because we have a catch trade that has come on. So I'm going to buy market. So now I have two contracts. There's a blue background and a +2. So I have two contracts on. Both of these are defaulting to a 20-point stop and a 50-point profit target. So I'm going to reverse that and say the first one that we put on was the catch trade, and now we've added a trending trade to it. So I'm going to scroll down to where my trending trade is. I know that the second trade is my trending trade, and that was opened at 500.5. The default stop is at 480.5. So I need to move that 10 points back. I'm just going to scroll down my DOM to 70.5. And I'm going to click in the middle of the price column. And so now I have one position on with a 30-point stop, and I have one position on with a 20-point stop. When we put the first trade on, that was put on at 501.25. So I need to scroll up my DOM to 511.25 because I want to change from a 50-point stop to a 50-point profit target to a 10-point profit target for a catch trade. So I'm simply going to click at 15,511.25. So now I have I can look at my open book, and I can see that I have a trade with a profit target of 15,511.25, and I have a second trade with a profit target of 15,550.5. Now you'll notice that although I have 501.25 as an entry and 500.5 as an entry, that the DOM is presenting to me an average of the two. Don't be distracted by the average. You're managing these trades based on your individual open or the open of the bar. So you're taking everything off the open of the bar. So let's just say now that my catch trade needs to be closed. My catch trade needs to be closed. And I know that my catch trade is the 501.25. Catch trade is 501.25. So I'm going to click buy market. Sorry, that is incorrect. That's incorrect. I am long. I'm going to click sell market to close one of my contracts. So now I have closed one of my contracts, and the order that I had placed at 511.25 is gone. I took that away. And now what I'm doing is I'm managing a trade based on the 500.5, and that has the default parameters of 50 points as a profit target. And I need to scroll down my DOM and just verify that I have the proper 30-point stop, and it does not, so I may have to reset that. So when you're trading doubles, you need to do a little DOM management. Now, I believe what's going to happen, I'm just going to put this thought out there, is initially you're going to get a little perplexed, and you're going to get hung up on the fact that, well, it took off the wrong trade. How am I making sure that it takes off the catch or the trend trade? It doesn't matter. What matters is that you take off one contract and you know which strategy that was that you're closing, and then you just reset your profit target and your stop if necessary. You always know which one of these was a catch trade, which one of these was a trending trade, and if you're left with a trending trade, just reset your profit and stop targets. For those of you who have traded the adaptive entry system, frequently Aaron would call out signals where we might have been in a long consensus signal and then we added to that a fractal. So this is not new. This is not a new strategy. This is not a new way of managing your DOM. It's exactly the same as when you had a adaptive entry system signal and then you also added a fractal to it. So let's do that one more time because I want to just make sure this is really clear. I'm going to close this current position. It is a long. I'm long one contract, blue background +1. And I want to close it, so I'm going to click sell market. So now I have nothing. I have nothing in there, okay? So this time what I'm going to do is I'm going to assume that I'm entering a trending trade. And I'm going to go short. So I'm going to sell market. And I'm short at 486.25, and it's listed here in my trades, 486.25. I can see in my open order book that I have a profit target of 436.25. I don't need to adjust anything because the default was 50 points of profit. But I also have a stop at 506.25, which is only 20 points. And on a trending trade, I need it to be 30. So I'm just going to simply scroll up and I'm going to move this stop from 506.25 to 516.25. And all I have to do to move that is just click in the price column at the price point that I want it at. So now we've moved a little bit, and I just kind of wanted to get away from the current price, and we see an opportunity to enter a catch trade. So I'm going to sell market again. This is a catch trade, and I'm in at 487.75. Now the first thing I'm going to do is to scroll down my DOM and place a order to close for a profit of 477.75. And by clicking in the price column on 477.75, it actually made the 50-point profit target on that second contract go away. It moved it to being only 10 points. So you're going to see that this is at 77.75. That's not 10 points off of this value, but this value is capturing the average. And I'm going to manage both of these contracts separately. I'm managing the catch trade based on a 487.75, and I'm managing the trending trade based on a 486.25. So now I have two contracts on. One has a 30-point protective stop. One has a 20-point protective stop. One has a 10-point profit target, and one has a 50-point profit target. So now I'm going to close the trending trade, which is the 86.25. I'm going to buy market. And I am left with the catch trade. Now let's just see if I need to reset this. See, it took away the profit target on my catch trade. So I just have to reset that, which is just fine. And I want to verify where my protective stop is because I'm left with the catch trade, which means that my stop should be at 507.75. So everything is set. When you're trading doubles, you're going to do a little DOM management. It's not difficult. It's not overwhelming. It's just going to take you a few trades to get used to it, and you should get used to it on a sim DOM. It doesn't matter which of the two trades your DOM decides to close. All you have to do is to manually be aware of what your entry price is for the strategy that you're left with and make sure that you adjust the parameters on your DOM accordingly. And then if I wanted to exit this trade, I am short. There's a red background with a -1. I'm short one contract. If I wanted to exit this trade, I would simply click buy market. One last thing while we are here, I'm going to click buy market on one contract. And if Kristen were to call out in the room, we need to reverse the trade. There's two ways you can do that. You can either click reverse, or you can click sell market twice. Since you are long, you're going to use an opposite colored market button. If I was short, the background would be red, and I'd be using the opposite colored market button. So I can either click reverse, or I can just double click sell market. And the first click closes my trade, and the second click opens a short position. And then make sure you always verify, either by scrolling up and down your dome, that your parameters are set correctly, or you can use your open orders book. You can see exactly where your orders are placed. So I'm going to go ahead and close out of this, click buy market. We're flat on the dome, and pull these back over. Okay, we're almost to taking some questions here. You can learn more about the Infinity Dome at newcycletrading.com/Aurora. Plus, Infinity has a lot of YouTube videos on managing the dome that you can look at. But if you go to newcycletrading/Aurora, and that's going to bring you to this page right here. And you have your menu items across the top. Click on education. And there's a bunch of information that's available to you that's free. You can use this link right here to access some videos that we've done on using the Infinity Dome. If you need instruction a little bit more on fractals, that's available to you too. That's free. If you want to learn a little bit more about futures education, maybe you're not completely comfortable with trading futures, you can click there. That's a free education video. And then there's information on the Aurora training system, training, where we now have session 1 loaded out there, and we have session 2 loaded out there. Session 3 will be out there tomorrow. And then you can also purchase the Aurora trading system, and you can purchase the personal trading plan. All right, so let's take a look at performance history on Aurora, the PB13. So we track and trade from 7 a.m. to 2 p.m. Eastern. I'm going to change our information to the PB13. And we see that the PB13, over the course of time that we've been tracking, averages 89 points a day. That's an average of 89 points a day. It shows that there have been 10 losing days out of 67 days. It's actually 9 losing days because there was one losing day that we hit such a high point of profit that we never would have lost that day, but it's presenting 10. So 89 points is a pretty strong average, in my opinion. Probably would satisfy most every trader's desired income goal. But we also can break it down and look at performance by day of the week. Mondays, and all the Mondays that we've tracked, is averaging over 93 points. Tuesdays is averaging 96 points. pretty consistent from Mondays to Tuesdays. Wednesdays is averaging 55 points. You know, what's interesting is that correlates to the overall system average, where Wednesdays are typically the weakest performing day. Thursdays are averaging just under 82 points. And Fridays are 118, almost 119 points. And that's right in lockstep with the overall system, where Fridays are the best performing day and Wednesdays are the weakest day for the overall system. But any way you slice it, it's a pretty strong testament to the integrity of the Aurora system, the signal entry for PB13s, and the rule set that we've devised for this. All right, I'm just going to touch on this here because we're going to get into this a little bit more in session 4, but I strongly advise that you use the Aurora trading system in tandem with a personal trading plan. You get to plan your risk, you can plan your personal profit goals, you can decide when you want to scale contracts, and actually the system is going to, the personal trading plan system is going to make that decision for you and present it to you. And you can track your personal profit and loss performance and see how it does. And I already showed you, you can download the personal trading plan by following the newcycletrading.com/Aurora. So we're going to jump to the personal trading plan, and I won't go into it in detail. We're going to discuss it in more detail in session 4 and how to properly build your plan and plan for your own trading. But basically, we've put together a plan that we're assuming that we could achieve an average of 120 points of profit on our winning days, and that our losing days are going to average 30.25. Now that actually lines up with what the overall system performance has been. We may be willing to trade as many as 10 contracts to scale up to 10 contracts, but the personal trading plan is going to provide that scale progression for us. And that actually projects a $4.2 million profit income for 2022. So we'll get into more of this in session 4, which will be next week. All right, so session 4 is going to cover setting your daily profit and loss targets. We'll dig a little deeper into the personal trading plan, how to use the Monday through Friday anticipated performance to influence what choices that you make during the day. We've been using that the last few days. When we get to around noon, we're looking at what the noon to 2 performance is for that particular day, and we're making some decisions about whether or not we want to keep trading. We'll talk about overall averages, winning day averages. We'll talk about personal trading plan objectives, and we'll talk about our philosophy and some guidance we want to provide to you on maximum daily loss limits and how to manage your risk and opportunity. All right, I'd like to address any questions that you might have here. Cliff saying, I've been curious what the rule adjustment was that Kristen found to be such a game changer in profitability. Cliff, it was fairly intricate and what she discovered just in terms of alignment between the multiple timeframes. So we were using multiple timeframe alignments, but we were using slightly different configuration of PBAs and CXAs on those. So it's a little bit more involved than just a simple explanation, but you're the beneficiary of the great work that she did on that. Rose asking, for PB13 trades, are white bars on the 10-minute PBA considered a contradiction of the prior 10? Are they treated the same as a blank bar? They are treated the same as a blank bar. If you have a white bar, it is blank. If you have a blank bar, it's blank. You can view them in the same way. AD is saying, regarding entry type 2 for entering an existing trend, what does your historical trade data show when entering a new trend versus an existing trend? Wondering if only focusing on new trend gives better returns. We don't have our data broken down that way. We have not coded it in our trading tracking database to differentiate between type 1 or type 2. So that's not a data point that I can provide to you. What I know is what the overall performance is, and it includes both new presentations of a new trend as well as re-entering an existing trend. Arizona, I believe it does. Arizona is just asking if the video, the tutorial covers setting up those end of trend alerts. So if not specifically, it's just simply an alert. Kevin D is saying, doesn't the DOM use a first in, first out? You can set first in, first out. You can set last in, first out, last in, last out. You can set it however you choose to, Kevin. Jeremy, you'll be able to do that from the recording. That's not something that I can go back and do right now and represent each slide. David's asking, when you have more than one order open and click on the price column, does the system move your most recent order? Typically, it's going to move your most recent order, yes. But I want to also emphasize again, don't get too overly preoccupied with it moved the wrong one. No, it is up to you to be aware of what your separate price point entries are and make an adjustment and set it properly based on those entry price points. So the DOM is not going to automatically manage your first entry, second entry, because it doesn't know that you might be actually exiting the second entry first, right? So your last in, last out, first in, first out, all those settings, they don't really matter. You need to be aware of what your entry price point is. You've got your order book. It shows what your entry prices are. You know, if you're paying attention, you know which one was the trend and which one was the catch trade, and you manage off of those price points. At that point, it doesn't matter what the DOM is doing. It doesn't matter how it presents it to you. If you close one of the trades, then just make sure that your settings are proper, your parameters are set properly for the trade that you're still holding. Artem's asking, can a trend trade and catch trade be in different directions? No. You may not trade different directional bias trades on a single DOM. And if you have, even if you have two accounts and you're trying to trade long on one account and short on another, you're going to get actually a warning and violation letter from Infinity. You cannot do that. So every double that we trade is has the same directional bias. Oh, thank you for that, Zach. On NQ trend trades, are you using 50-point target and 30-point stop? Yes. How would we set targets and stops for ES or RTY? Right now, Zach, I don't have the appropriate parameters. We haven't done the same level of detail data tracking on ES or RTY to know whether it should be a 10-point profit target, a 5-point profit target, or what the stop should be. So what I would encourage you to do is, if you're interested in exploring ES and RTY, track some trades. So first of all, trade in sim and track some trades, and to gain a sense for yourself of what the right parameters should be. As our catch trades are a 20-point stop and a 10-point profit target, you need to determine what it should be on ES and RTY. Zach, that would be actually more appropriate for an email. If you would send me an email directly, you can send it to, just to make sure that I get it, send it to Dorothy at optionsmoneymaker.com, and she'll make sure that I get that and ask that question that you just asked, and tell Dorothy that I asked you to reach out to her, and we can have a conversation about that. Deborah's asking, what's the average number of PB13 trades a day? So PB13s, Deborah, on an average day is about 7.5 trades. If I go to the, I'm going to change this back to all, and then I'm going to go to the summary page. Oops, I've got a day of the week in there. There we go. So Deborah, here's your PB13s, and you can just kind of visually scan through here and see what the range of trading activity was. There's some days that are just really big days, but only a few trades, and there's other days that are unfavorable days that you know, are more trades. So it looks like the average is about 7.5 trades. Mario, we will probably get into that a little bit in session 4, maybe session 5. And if we run out of time, then we'll probably schedule an additional session. Mario's asking when we might be talking about options as well. But we'll let you know about that, Mario. Cliff is saying the PB13 on the 1900 bar. I'm assuming the PB13 on the 1900 bar. I'm not sure why you consider that interesting, but let's just see here. Oh, it is interesting because of the size of the bar. I see that now. So the 1900 bar actually came out at 1902.51. So presented short. It was not the first presentation of a short. So it came out at 1902.51 right there. So your entry was actually 1903 off of the 3-minute bar. And that 3-minute bar moved from 467 down to 451. So it was about a 16-point move on that bar, and then it reversed. So it didn't hit 20 points. So we would not have adjusted our stop to the prior 5-minute bar. So it did not hit 20 points. It would have needed to get down to 47. It only got down to 51.25. And then it reversed. And so let's see here, was there an exit? The next 1910 bar, yeah, 1910 bar was a PBA stopped. 1910 bar was a PBA stop, so we would have been out on that 1910 bar at 79.75, and we were in it at 67. So we would have lost 12 and 3/4 points on that trade. Rob's asking, what do you do when you enter a double trade and now you have, your stop has 2 contracts at the same price and your target has 2 contracts at the same price? How do you manage that? Well, that's what's really cool about this new feature that we shared with you, where you can click in the middle in the price column of the DOM. If I'm going to I'm going to do it this way so I can show two at the same price. If I sell market and I'm at, let's verify that so I'm in at 492, two contracts. So if I scroll down 50 points, I've got two contracts at 50 points. Well, the simple way to adjust that is, you know that one of these is a catch trade. So all I have to do is go down to 482 and click in the price column. Oops, that's my bad. You know what? That is something I just learned. It defaulted to the two contracts. So I'm going to show this to you differently. Forget what I just said. I have to show this to you a little differently. Okay. I'm going to send the bracket order so it's back out there. And what I'm going to do is I'm going to pull my open orders book over here. So I can click the little pencil icon and I can change the quantity to 1 at that level. And now I can go click on the 82. These are all things that you'll get used to on your dome. You basically are using your open order book to separate the contracts and make sure that you only have one at that price level. All right, Deborah's asking, any thoughts on the downtrend of NQ today? Do you anticipate it moving up tomorrow because of the magnitude of today's decline? That's not the type of speculation that I do, Deborah. I don't actually care which direction the market moves. I only care about finding my alignments between 3 and 5 and 3 and 10. And if those alignments happen in a downtrending environment, great, as long as it gives me 10 points or 50 points of profit on my trades. If it happens in uptrending environments, that's fine. I really don't care which direction the market's moving. I'm looking at such a small snapshot of time here. You know, my 10-minute chart really only shows a couple, 3 hours on a 10-minute chart. My 3-minute chart is really only showing about an hour of time. So that's a very narrow window. We're not trading the overall market. We're not trading, you know, what the fundamental analysts are saying is going to happen with the FANG stocks or, you know, this particular sector. We don't really pay any attention to that. I don't really care about any of that. I care about whether my 3-minute PBA is aligned with my 10-minute PBA, what direction it's aligned, and whether or not I can grab a 10-point profit or a 50-point profit, depending on the strategy. That's correct, Jeremy. That 1900 bar was a re-entry, so we didn't need it to move 20 points. We would have used the prior 5-minute bar, and we didn't need to wait. In this case, we did have to wait because it was a mid-bar print. So once again, we entered that trade at, I say 1903. At 1903, when we got into that, the prior 5-minute bar was back at the high of the prior 5-minute bar was back at 99, which was more than 30 points off of our open. So I would have left it at 30 points. And then when the 1905 bar closed and the 1910 bar opened, I could have moved the stop to 81.50. 81.50. That adjustment would have taken place on the 1910 bar, but on the 1910 bar, we had a PBA stopped signal, and so we were out at the open of the 1910 bar. All right, thank you for that, Arizona. I appreciate having you here too. Appreciate your comments. Michael C., you're asking how Aurora did from 2 to 4 today. We don't track anything after 2 o'clock. Our tracking time frame and our trading time frame is from 7 a.m. Eastern to 2 p.m. Eastern. I mean, I can take a quick visual scan of the 10-minute chart from 2 o'clock. Oh, it looks like it was awesome. I don't know if there were any valid signals, but that's pretty awesome. Starting at 2 o'clock, we went from a high of 713.75 down to, wow, down to a low of 458. That's a really nice sell-off. So probably some great profit opportunities in there. Kevin M. is asking when in a PB13 long with a PB3 confirmed, about 6 minutes later, the 10-minute is still long, but the PB3 changes to short. Do you exit the trade? We do not exit a trending trade. We do not exit a trending trade based on the PB3 signal. We exit a trending trade. Let me just rewind back there for you, Kevin. We exit a trending trade. Here we go. When we have an opposite PB35 or a PB13 reversal, but we do not close the trending trade for an opposite PB3. Greg's saying, so your alert should stay on the 10-minute log when you're in a PB13. Well, certainly you want to be highlighting the 10-minute chart when you're approaching the next 10-minute bar print to see whether or not if you're going to have a PBA stopped. But that's actually because of the way I have my charts set up. I have them set up so that I'm actually only looking at the alerts for the particular time frame that I'm highlighting. But you can set it up to be, I have the current time interval checked. If I removed that current time interval, it's going to commingle all of my 10-minute, 5-minute, and 3-minute signals, alerts. So you can set it up that way if you choose. Just my personal preference. I like having the current time frame set up, and then I just kind of roam back and forth between the different time frames. Jack's asking if we have a downloadable PDF with all the rules for the Aurora system. We will have that available once we've completed the entirety of the training series after session 5. Kristen and Aaron are putting that together. Just want to make sure, first of all, that we have actually completed the training before we put that in your hands. But yes, we will have something available for you. You know, Kendall, thank you for mentioning that. So as an additional little tip, it's not a rule and it's not the way we track in our performance data. But there is an opportunity when you have a relatively slow moving trend to completely remove the 50-point profit target and basically just set up an open-ended profit target. Now you can do that all the time if you want to. But when you do that, you're essentially just using the series of higher highs and higher lows on the 5-minute chart. So in this particular sequence, if we had a signal that put us in here at 1420. I'm not saying that's valid. I'm just hypothetically sharing this with you. We being at 649, you can see that there's a whole series of lower lows and lower highs leading down to a point where you may have been taken out at 625. So that's only 24 points, but then you get back into the trade. And so let's just say maybe you get back in here, you can follow the sequence down until there are going to be occasions, not often, but there are going to be occasions where you might have gotten in here and you're in at 574.5 and you're following the lows and highs and you're out at 516. So it's about over 50 points, is about 60 points. And actually it got down to 463. So you could lock in something there. So when we're in a strong trending market, it's kind of a bonus opportunity if you just delete the 50-point profit target and just follow the sequence of lower highs or higher lows on the 5-minute chart. So Jeremy is saying if someone signs up tomorrow, even though it can take time to get everything set up for our own charts, would that at least give us access to the live trading room for next Tuesday? I think we can get you set up, yes. We typically say 1 to 2 business days, but Aaron's sending me a message here and says, yes, absolutely. We'll get you set up, absolutely, so that you can be in the live trading room. Michael is saying, is there a list of the alerts and timeframes that are the ones that are actually used for the trade criteria in Aurora? I like to minimize my active ones. Yeah, if you've gone through Aaron's chart tutorial, or you understand that we're looking for alignment between 3-minute PBA and 5-minute CXA and 3-minute PBA and 10-minute PBA, those are the only alerts that you really need to set up. You definitely want a 10-minute signal stop, PBA stop set up. But if you go through the rules and understand what the criteria are that we're using for entry and exit, you can limit your alerts to just those. Vic is saying, if I sign up next month, what's the training schedule for February? There is no particular training schedule, Vic, after this 5-session series. If you sign up next month and you had not been through the training yet, you get immediate on-demand access to the 5 training sessions. And when you sign up, you also have included in your subscription access to the live trading room. So the live trading room is designed to be an ongoing educational support. So if you've been through the training and you still have questions, we're here in the live trading room every day. Kristen is calling out the signals, helping you confirm your understanding of what a valid signal is and is not, when to get in, when to exit, and we're available to answer any questions that you have. So that's the ongoing education support that we provide. I would suggest, Vic, that you call Infinity Futures. Aaron can provide to you our contacts information. So call and it's very quick to get an account set up. We'll make the 5th session available to all paid subscribers, Michael. Aaron and Dorothy will be in touch with you about that. Okay, I don't see any other questions. Oops, there's another couple. PM, you can use whatever trading platform you choose. You use whatever trading platform you use. We use and prefer the Infinity Futures trading platform, but you use whatever you prefer. All we are doing is providing signals that tell you when you should get in and out of a trade, and you trade those signals on whatever platform you're most comfortable with. Samson's asking, will there be a TradingView setup session to help us set up our charts properly? Or is the follow along video the only option for that? Not sure what you mean by the follow along video. Aaron has been doing live webinar sessions that are tutorials on setting up your chart. You have an opportunity to ask questions in that. She's recording those and providing the recording to you to review if necessary. So that is the interactive opportunity you have to have somebody help you set up your charts. Thank you, Lyle. Appreciate that. All right, folks, I don't see any other questions out there. We're going to go ahead and close out the session. I'm just going to strongly remind you that at newcycletrading.com/Aurora, you have a bunch of information. And if you click on the education tab, you've got some free instructional videos. The first two are your opportunity to subscribe to the Aurora trading system. $397 a month for the first 2 months. That's a huge discount. That's saving $1,200 in the first 2 months. And then it's $797 a month after that. That's an ongoing $200 a month discount. And then the personal trading plan, these are the two tools that are going to offer you an opportunity to set yourself up for a 6 to 7 figure income in 2022, starting with as little as $5,000 account. The personal trading plan is a one-time payment of $197. These are the two most critical tools. The Aurora trading system subscription gives you access to the live trading room. That gives you access to me, Kristen, and Aaron throughout the day until we decide to complete our trading for the day. We open at 8 a.m. Eastern. You can trade right along with us using your charts. You can ask us questions. We're here to help you achieve your personal income goal. So these are the two tools that I really think you need. And I'm going to close out this session by just saying this. The pricing offer that we put out there is $397 a month for the first 2 months. The regular price of this system is $997 a month. If you sign up and you pay $397, and then your second month you pay $397, and then in your third month you pay $797. In order for you to cover the cost, of your first 3 months, that would require just 80 points of profit. Those 80 points can come in a single day, like they did today. It can come over, a 2 or 3 day period, but I'm talking about how to fully pay for the cost of access to this system that could build a tremendous amount of abundance for you and your family. 80 points trading the NASDAQ 100 futures, 80 points. Our average point production is over 150 points a day. That's over 150 points a day average. So the value equation is significant, and it's really entirely up to you to take full advantage of it. All right. Thank you, everyone, for being here. Really appreciate you being part of our community. Appreciate you participating in this training and your interest in the Aurora trading system.